Hi guys, so I am going to do a recording for you quickly of your assignment 2, ACBP5122 for 2023, your second assignment. I'm going to do a walkthrough of the model answers, again just to help you with understanding where you went wrong with the assignment, and then also you can use it in your exam preparation. Okay, so I'm sharing my screen now. I'm just going to go across to the file. Let's just, there we go. Okay, so on the left-hand side is the question paper, and on the right-hand side, we've got the memo. So you can follow along like that. So let's go. First question 1.1. 2 parts to the question, 5 marks each. The first one, for each of the following statements, indicate the words that best describe the statement. And in your answer book, you only need to write down the number of the question with the correct word or words. So they were looking for a word, a definition, a little description, just to show that you understood exactly what this, you understand exactly what the statement is. So they've basically given us a definition, and we've got to say, what is this a definition of? So the first one, let me go across here where you can see on the right-hand side the answers. The first one, the method of depreciation, where the annual depreciation is calculated as a percentage of the carrying value of the asset. So remember, the 2 methods you guys have done is we can calculate it as a percentage of the carrying value or as a percentage of the cost of the asset. So when we calculate depreciation as a percentage of the cost of the asset, what's that? That is called the straight line depreciation method. So this must be the other one, percentage of the carrying value, which means we've taken the cost and we've subtracted the accumulated depreciation to calculate what the carrying value is, and we then multiply that by whatever percentage we've been given. So that is then the diminishing balance or reducing balance method. To get that mark, that's what you had to stay. Then the second one, assets that are controlled by the entity. So that controlled by was your clue, for longer than 1 year. So 2 clues. What is that a definition of, or part of the definition of? That will be a non-current asset, because as soon as we are going to have access or have the use of that asset for longer than 12 months, then it's a non-current asset. Any assets that we are going to consume or use up in our business within the current 12-month financial period, or the forthcoming 12 months, then that will be a current asset. Then we've got the accounting concept. So take note of the word concept, because that helps you, gives you a clue what to look for in your textbook. That stipulates that all expenses must be assigned to the financial period in which they were incurred. So in other words, that means if I incur an expense in the month of November, then that expense must be recorded and recognized in my financial statements in the month of November, and not in the month of December or January when I eventually pay for that expense, if I'm only going to pay for it in the future. So that is called the accrual concept. Then the source document, so they want the name or description of the source document that we will record our end of month or end of financial year depreciation in. So in order to get that right, you had to know which journal do we record depreciation in, and then you would know which source document we use for that specific journal. So depreciation is one of our sundry journal entries that we make. It doesn't belong in a cash book. It's not a cash transaction. It doesn't belong in any of our credit journals because it's not a credit transaction. So therefore, it's the third kind, which is a sundry type of transaction. All sundry transactions are entered in our general journal, and every single journal entry that we make in the general journal has to be recorded on a journal voucher. And that journal voucher then becomes our source document for referring back to say, why did I make this journal entry? Go and look up the journal voucher, and your description will be on there. Any attached working papers that you had will be stapled to that journal voucher. And that's why we use a journal voucher for everything that we record in the general journal. Then the last one, the document that shows the important details pertaining or regarding a particular asset. So all the particular details for an asset are recorded in the asset register. So all of that was in your textbook. They were all part of your learning objectives, so you shouldn't have had trouble finding those at all in your textbooks. Okay. Then we've got a true or false. I'm going to just hide the answers for a minute so that you can see if you get it right as we go along. So our first one, liabilities are a resource controlled by the entity for less than 1 year as a result of a past event from which future economic benefits are expected likely to flow into the entity. Okay, so if you know your definitions of our different components of our financial statements, you'll know that that is definitely false, because what definition have they given us here? It's not liabilities that are resources controlled, etc. Assets are resources are resources controlled by the entity. If we're looking at and this less than 1 year, it would depend on whether we're talking about a current asset or a non-current asset. If it's a resource controlled by the entity for less than 1 year, it will be a current asset, a result of a past event from which future economic benefits are expected to flow. Okay, so this statement is false. Then the second one, the account that we credit when recording the depreciation adjustments, in other words, when we actually do our depreciation journal, what general ledger account gets credited? And here they're saying it is accumulated depreciation. So what's our journal entry when we record depreciation? We debit the expense account depreciation and we credit the negative asset account accumulated depreciation. So that one will be true. Then the third one, accrued expenses can be classified as a non-current liability. So what's the difference between non-current and current? Current, we will settle that liability within the next 12 months. Non-current, the liability will only be settled further out in advance than 12 months. Accrued expenses are by their very nature expenses that I incurred in this particular month, and I need to recognize it now because of the accrual concept. So that means that that will definitely be, what do they want us here? They want true or false. So this statement is false because accrued expenses will be current liabilities. Then prepaid expenses occur when expenses have been paid in the current financial year. So in other words, we physically paid whoever the supplier is in the current period, but the actual expense itself only relates to the next financial period or a financial period in the future. So that is true. That's exactly why we call something a prepaid expense, because we've paid that expense in advance. We've paid for the expense now, but the actual expense will only be incurred in the future. So in your textbooks, you've got examples like rent and insurance, where you're paying the rent or the insurance now, but you're paying the rent for next month's rent, or for insurance that you're going to be covered for over the next 12 months. Then the account to be debited when recording the creation of allowance for credit losses is the debtor's control. Okay, the account, so what general ledger account will be debited when recording the creation of an allowance for credit losses? So this one here is false. So can you remember what account do we debit and what account do we credit when we create an allowance for credit losses? So this is an expense that we are recording when we do that. So we have to debit an expense account, and that will be called credit losses adjustment. And we will then credit the account called allowance for credit losses, which is again a negative asset. Okay, so hopefully you guys are okay with that one. So now let's have a look at question 2. Go down here. So the following are some of the balances in the books of Concord Limited as at the 30th of June. So as soon as we see that, and we've got this, and they've asked us here to prepare asset disposal account and prepare the notes to the financial statement, and we've got information here about depreciation. The first thing that you're going to want to do is create a timeline for yourself. Okay, and we want on that timeline, whoopsie daisy, 10, that should be fine. The month of the beginning of the year, so if our year end date is the 30th of June 21, our year would have begun on the 1st of July 2020, and the year will end on the 30th of June 2021. Okay, so that's the beginning and the end of our financial year that we're talking about in this particular exercise. So once you've written your timeline down, and remember your timeline is always going to be for this current year, because we are doing the journal entries for this year. So we need to know in this financial year what expenses or incomes or whatever adjustments do I need to make that affected these 12 months of the financial year. So they've asked us, let's just have a look. So we've got 3 assets, equipment, vehicles, and furniture, with their cost accounts and their accumulated depreciation accounts. Additional information says that an office computer, which we must classify as equipment, was bought, so that's a new one, on the 1st of October 2021, so that's at some point in the middle of the year, and we paid 20,000 for it. And then in addition to that, a vehicle with a carrying value. So carrying value means its original cost minus its accumulated depreciation is 60,000. And it has got accumulated depreciation of 91,400. As at the date that it was sold on credit, so we didn't sell it for cash. Mr. G. Gundolf still owes us the money, the 55,000 for that. And it was sold on the 1st of July 2021. So let's have a look at our timeline. Let's record this on our timeline. We bought a computer on 1 October. October, this must be a mistake. We must have bought it in October 2020, because October 2021, let's see if I can fix this. Okay, I've already highlighted that, so it doesn't want to allow me to change that. There we go. And we are going to change that to October 2020. Okay, because our year ended on the 30th of June 2021. So October 2021 would only be in the next year. So we sold it in October 2020. So let's find October 2020. So July, what did they say? And it was on the 1st of October. Always make sure that you are paying attention to which day. Was it the 1st of October or was it the 31st of October that we bought or sold the equipment? So on the 1st of October, so we've got here July. Let's just use drawing. July, August, September, October. So I'm just making a random line there, and I am going to say that that is the 1st of October, and I bought a computer on that date. Okay, so that means that I owned the computer from the 1st of October through to the rest of the year. So when I come to working out the depreciation for that new computer, I will only work out depreciation from the 1st of October to the 30th of June, because I can only depreciate it for that period during which I owned the asset. Okay, so this is what you're going to use a timeline for and how you're going to quickly scribble on it. Then the second one, it's a vehicle that was sold on the 1st of July 2021. So go back to our I hope that date is correct when we get to the, let me just double check something. Sorry guys, before we carry on, I want to just see that they've got that date. What was that? Vehicle. Okay, I'm not too sure. Anyway, let's just have a look at these, at the dates. It was sold on 1 July 2021. No, that must also be 2020. Otherwise, this is not going to work. I beg your pardon about, I can't remember if we actually fixed these, dates. This must be $2020. In other words, we sold it on the 1st. I'm pretty sure that's correct. We'll double check when we, oh dear, where am I? Text. Don't want that. Oh dear, I don't know why I can't just get to the place where I want to. There we go. Okay, that one's also going to be 2020. I'm pretty sure that's going to be correct. Let's have a look. Which means that we purchased the, sorry, that means that we sold the vehicle on the very first day of this current financial year. Okay. Sold vehicle, 1 July. Don't worry about the spelling. And I've made a note. So that means that depreciation for that vehicle that was sold, if I sold it right here on the 1st of July, I did not own it at any point throughout this particular financial year. So therefore, for that vehicle that was sold, there will be no depreciation. Okay. I just hope that these dates are correct. Yes. Okay, everybody got that. And then non-current assets are depreciated as follows. So they have to give us our depreciation rates. Equipment is 33.33% on cost. Vehicles is 20% diminishing balance method. And furniture is 15% diminishing balance method. Okay, so make sure you know the difference between your calculations for these two methods so that you don't get muddled up on exam day. So the first thing that they want us to do is prepare the asset disposal account to reflect the sale of the vehicle on the 1st of October. That's going to be on the 1st of October 2020. So when we've got an asset disposal, what you've got to remember with asset disposals are what are your steps. With all of this accounting, just learn at home and memorize what are the steps when I've got to record this particular type of transaction. Memorize the steps, and then you will never get any of this of this incorrect. Okay, so here's our, on the right-hand side is our asset disposal T account. So remember, we call it a T account because it's in the shape of a T. We've got the total going across, and on the left-hand side, we've got details, folio, date, details, folio, amount. And then here is the center line of our T. And on the right-hand side, we've got date, details, folio, amount for credits. And on the left-hand side, if we want to debit our asset disposal account, we will enter that here on the left-hand side. And if we want to credit our asset disposal account, we will enter that here on the right-hand side. So again, just to remind you how this works, this column, amount column on the right-hand side, we will write an amount in there if we are going to credit asset disposal. If I am going to debit asset disposal, I am going to write that amount in this column, amount column here. Okay, this amount column here on the left. So this column will be used if I'm going to debit asset disposal. And this column here will be used if I'm going to credit asset disposal. So remember, we've got these two columns here with the heading details. So because we try and make a system where we are recording in a logical fashion that allows us to always see what we did and to trace our steps going backwards, when we, in our general ledger T accounts, on the left-hand side, where I enter an amount, if I'm debiting this account here, asset disposal, in the details column, I write down the name of the general ledger account that I am going to credit. So when I look over here, I can see I debited asset disposal and I credited vehicles. Okay, it's called, this is what we call the cross-reference. So instead of just putting this debit over here in asset disposal, I'm giving myself some extra information. And when you come and look at the asset disposal account, you can say, oh, okay, so I debited asset disposal with 151,400. I wonder which account I credited. And now you can see straight away it was vehicles without having to go and look up in your general journal and then waste a lot of time. And the same thing on the right-hand side of all of your T accounts. In this details column here, I write down the name of the GL account that I debited. So, because remember, this is the credit side of the asset disposal account. So if I credited asset disposal with 91,400, this tells me that I debited accumulated depreciation on vehicles. So I immediately can see the double entry of this 91,400. I credited asset disposal with 55,000. I can immediately see here that debtors control got the debit for 55,000. And remember, it's a double entry. Debits always exactly equal the credits. So if I credited asset disposal with 55, it means I debited debtors control with 55,000. Okay. So our steps for asset disposal say that first of all, we go and we work out or discover what the cost of that particular asset is that I sold. In this case, in the question, they didn't give us the value for the cost of the asset. They gave us its carrying value, which is cost minus accumulated depreciation, and they gave us the accumulated depreciation. So using these two amounts, we had to work out what the cost was. So 60,000 is what's left over after deducting depreciation, accumulated depreciation. So if I add 60,000 plus 91,400, those two amounts together will add up to what the original cost is. Okay. I must transfer the cost out of the general ledger account vehicles at cost and put it into asset disposal, which means I must credit vehicles and debit asset disposal. Because the debit was sitting in vehicles and I'm transferring that debit out of vehicles into asset disposal. So now if I go and have a look at the vehicles account would have the original debit of 151.4 sitting on the right hand side, and it will now have a credit of 151.4 on the left hand side, meaning a debit and a credit of equal amounts means the balance left over in that vehicles account for this asset is zero. I've taken the vehicle out of the vehicles account and put it into the asset disposal account. Then I must also transfer the balance of all the accumulated depreciation for this particular vehicle out of accumulated depreciation account and into the asset disposal account. They gave us the amount of 91,400. So because accumulated depreciation is a negative asset account, it's got a carrying credit balance. So in order to transfer it out of ACDEP, I must debit ACDEP, debit accumulated depreciation, and credit asset disposal, 91,400. The folio is the general journal because, again, when we dispose of an asset and we record that transaction, it's not a cash transaction, it's not a credit transaction. Therefore, it's a sundry transaction, and all sundry transactions get recorded in the GJ, the general journal, using a journal voucher that we wrote up. So we've transferred the cost, we've transferred the accumulated depreciation, and the third amount that we must enter into the asset disposal account is the amount for which we sold the asset. How much are we getting paid for the sale of this asset? So they told us that we sold it for 55,000. Okay. So if we sold it for cash, we would debit bank account and credit asset disposal of 55, but we sold this on credit, so we are going to debit debtors control. Debit, debtors control, and credit asset disposal with the value that we will be receiving for, with the sales value for the sale of the vehicle. So those are your initial 3 steps. Transfer the cost, transfer the ACDEP, record the amount you are getting paid for the vehicle. Okay. These entries will always take place on the exact same side. Because your cost is always a debit, it will end up on the debit side of asset disposal. Because ACDEP is always a carrying credit, it will end up on the credit side of asset disposal. And because we are getting paid an amount, it is income, that will always appear on the credit side of the asset disposal account. Okay. Then our remaining 4th step is then to work out, did we make a loss or a profit on the sale of this particular asset? And then we record that in the profit or loss on sale of asset. And the way we do that is we add up the left-hand side, which is 151,400. We add up the right-hand side, because remember at this point in time, this entry is not yet here. So 91,400 plus 55,000 is equal to 146,400, which is less than 151,400. So we subtract the two, 146,400 minus 151,400 equals 5,000. Because my debits must equal my credits, I must record that 5,000 on the credit side, because now if I add those 3 amounts together, they will exactly equal 151,400, and my debits equal my credits. So because I'm going to be crediting asset disposal in order to balance the asset disposal account back to 0, I have to debit the opposite side of the entry. If I'm going to debit the opposite side of the entry, that means it must be an expense. Expenses are debits, which means I must have made a loss on the sale of the asset. If we had to put a credit in the asset disposal in order to make the left-hand side equal the right-hand side, then that means we would have debited asset disposal and credited the sale of the asset account, which then means if we have to credit the sale of an asset account, it would have been an income account, which means we would have made a profit on the sale. Okay. But in this instance, we are crediting asset disposal and debiting loss on sale of assets. So debit and expense account. Okay, so that's how you know whether it's a profit or a loss. A debit to loss on sale will be an expense, which is a loss, and a credit to loss to sale on asset would be a profit because it would be an income. And then left-hand side totals 151.4. Right-hand side now totals 151.4, which means when my debits equal my credits in a T account, they contra each other out, which means the closing balance in asset disposal account is now 0. It's nil. And it's all ready for the sale of the next asset that I happen to sell. Okay. Then the next thing that they want us to do is to prepare the notes to the financial statements. Guys, if you learn your note, then you just have to practice them. And if you know your note, look, here's 30 marks that you can easily get. If you haven't practiced your note, you'll be totally lost. You have to practice it so that you know exactly what it looks like and what goes where, and then you will always get really good marks for your notes to your financial statements. So they want the note of the financial statements for the property, plant and equipment. So PPE, which is our equipment, vehicles and furniture. Those are the 3 assets that we've got that belong in property, plant and equipment category of fixed assets in my general ledger. And we've got the 3 different depreciation rates here that they've given us. And we know that we bought a new computer and we sold a vehicle. Okay, so whenever you've got to do your notes, the format is exactly the same. With any of these notes, you're going to start at the beginning of the note. Look at the column, the first column on the left-hand side. This is what you have to memorize. It will always be identical and in the identical order. Okay, it's set out like this. At the very top of the note, we are going to put our opening balances. So this here, opening cost minus opening accumulated depreciation equals opening carrying value, as at the 1st of July, and this again is 2020. Okay. And this here would be 2021. Gosh, these dates were really messed up. Then in the middle, over here, we record the movements that took place during the year. So what do we mean by movements? We mean, did I sell any assets? In other words, an asset that I owned at the beginning of the year, I no longer own at the end of the year. It's just asset disposal. Did I buy any new assets? Again, what does that mean? It means at the beginning of the year, I did not own that asset. It was not included in this carrying value, but at some point during the year, I acquired the asset. So at the end of the year, that asset is included in my closing values. Okay, here's my closing values. Closing cost minus closing accumulated depreciation will equal my closing carrying value. Okay, so you can see all we're doing is saying this is what I owned carrying value at the beginning of the year. what did I add to my assets? What did I take away from my assets? And how much of the value of my assets changed because I recorded depreciation for the current year, so that at the end of the year, what was the carrying value of all of my assets? So this is what we're doing. We are reconciling the carrying value of the assets at the beginning of the year to the carrying value of the assets at the end of the year by using this note to show the readers of my financial statements all of the movements that took place during the year. And the only movements you guys have to worry about are, what did I buy, what did I sell, how much did I depreciate my assets for? Okay. So this you've got to memorize. What takes place in my note. Okay. And then, because in this particular set of financial statements over here, I've got equipment, I've got vehicles, I've got furniture. We need a column for equipment, I need a column for vehicles, and I need a column for furniture. So that I am going to be showing for all three of those categories what my opening balance was for each of them and what my closing carrying value was at the end of the financial year. Okay, so this first bit over here, opening balances, are super easy. All you've got to do is come to the information they've given us and you copy it down. So where you've got just the name of the asset like that, that always means that that is the asset at cost value. In other words, the only thing we ever record in this particular account, equipment, vehicles, furniture, is the rand value that we paid for the asset in total when we purchased it. We never put anything else into that account. The purpose of that account is to contain the record of how much we paid for our assets when we bought them. Okay? And which is why we call these ACDEP accounts negative assets, because we use these accounts as a separate account to record when we depreciate our assets at the end of the year by how much in total has the original cost value of our asset diminished because of depreciation over time, over the years that we've owned that asset. So that when I take equipment at cost, 80,000, and I subtract the negative asset equipment depreciation, 24,000, 80,000 cost minus 24,000 ACDEP, I can see that the carrying value of the equipment at the beginning of the year was 56,000 Rand. Carrying value means what was that equipment actually worth? It's not worth 80,000 anymore because I've used it. And we all know that when we've got something that we've used for a while, we can't sell it for what we paid for it originally in most cases, because it's what we call a depreciable asset, which means it's an asset that diminishes in value as it gets used up. Okay, and you do exactly the same thing with vehicles and then with furniture. The cost and the ACDEP must go in brackets. Remember, see there, the cost, no brackets, the ACDEP with brackets, indicating that the cost is a plus and the ACDEP is a minus, and that gives us the balance of the value at the beginning of the year. So let's do equipment first in terms of the movement. So we go and look at the information that we've been given and we look for details about equipment. Were there any additions during the year? Go and read. Yeah, we said office computer was bought on the 1st of October for 20,000. So in my note, additions is always recorded in this column at cost. So I added 20,000 to my cost for equipment, and that's all you write down there is what was the purchase price of any equipment that you purchased. Then next, disposals. And disposals we always record in this column, oopsie, at carrying value. In other words, what was the carrying value of the asset, oh goodness, of the asset that I sold when I sold it. So we didn't sell any equipment. The only thing that we did sell was this vehicle. So we put a little dash there to show no equipment was sold. Then the third thing that's left for me to do is to calculate depreciation for the year on all of the equipment that I owned during the year. And this is where your timeline comes in. All of the equipment that you owned for the entire year, you will depreciate, and you still own it at the end of the year, you will depreciate that for the full 12 months at 33% per annum on cost. Okay, which means that this equipment for 80,000 Rand, we owned it at the beginning of the year. We still own it at the end of the year because I didn't sell any. So I must depreciate that by 33%. So let's go and have a look at our workings. Here you go, workings 1. And remember, look at how you cross-reference your workings. I know that I'm going to do some workings to work out this amount that I'm going to write in depreciation. So I write down W1 in my little column, and I do a heading W1, and then underneath that I do the workings. So 80,000 cost that I owned all the way through the year, 33.33% on cost is my depreciation method, equals 26,667. That's for the full 12 months, so I don't need to make any adjustments to that. Then on the 1st of October, I bought a computer that must only be depreciated from the 1st of October through to the 30th of June. So equipment is depreciated on cost, so I write down the cost of the equipment that I purchased. It's depreciated at 33.3% per annum on the cost, so multiply by 33.3. And from the 1st of October to the 30th of June is 9 months. So I only owned that new computer for 9 months. So I multiply this full annual value of depreciation. I only want 9/12 of 1 year's worth of depreciation, just to represent the number of months that I owned it for. And there I get 5,000 Rand depreciation for the new computer. Then I add together the depreciation for the equipment that I owned for the whole year, plus the depreciation for the new equipment. That means for the whole year, my depreciation is 31,667. That's the end of my workings. And I take that amount, 31,667, and I write it into my depreciation line for the year under equipment. Because depreciation diminishes or decreases the carrying value of my assets, it must go in brackets. Okay, when we purchase, my cost will be pluses. If I purchase new things at cost, it'll be a plus. ACDEP and new current depreciation, it must be in brackets minus. And then that's it. There was no other movement on my equipment, so I can now work out these my closing values that must go here. So let's work out my closing cost. I've got opening cost of 80,000 plus new cost of 20. So 80 plus 20 means my closing cost is 100,000. I've got opening ACDEP of 24,000 plus new depreciation of 31667. So 24 plus 31667 is closing ACDEP of 55,667. Cost 100 minus ACDEP 55,667 works out my closing carrying value of 44,333. Okay. Those are the steps and the method you must follow when you are doing each column of your note. So let's have a look at what else we've got. Let's just do furniture first because this one is easy. Furniture, opening, cost 53,600. So under the cost line, I write 53,600. Opening ACDEP for furniture is 18,400. So minus 18,400. 53,600 minus 18,400. I've got opening carrying value for furniture 35,200. I didn't purchase any new furniture. I didn't sell any furniture, so dash and dash, but I must depreciate the furniture that I owned. This furniture I then owned for the whole year, and I must go and depreciate it. So let's see what the depreciation method is for furniture. It says 15% according to the diminishing balance method. Diminishing balance says I must take 15% multiplied by the carrying value. So what was my carrying value for my furniture? 35,200. Workings 3. Let's go and have a look at our workings 3. Oh, interesting. Oh, sorry, it is there. I'm not looking. Carrying value of furniture. Sorry, that's the cost of the furniture minus the ACBP, opening cost minus the opening accumulated depreciation. You could have just written, you've already done this over here, so you could have just written 35,200. You won't lose any marks if you do it that way. 35,200 multiplied by 15%, because that's what they've told us, 15%, diminishing balance method, equals, oh, here they've got the other method, or 35,200 times, so equals 5280. We take our 5280, which is the current depreciation that we've worked out, and we put it on the depreciation for the year, or we can also call this line current depreciation, and we put that under furniture. It must be in brackets because it's a minus, and then we just work out all of our closing balances here. 53,600 at cost is still 53,600 because I didn't buy or sell any new furniture. Accumulated depreciation 18,400 plus 5280. My ACBP is now increased to 23,680. So my carrying value is now 53,600 minus the new ACBP of 23,680 is 29,920. So your opening balances up here for the following financial year will be this identical to these three closing balances at the end of this financial year. So these three exact amounts, when you do 2022's accounts, these will be your starting opening balances up at the beginning here. Okay. And then for our vehicles, this one is where we sold a vehicle. And we sold the vehicle on the very first day of the financial year, which means that for that particular vehicle, we mustn't have any depreciation for this year because we didn't own it or use it this year at all. So we've already done our opening balances. So now we go through our questions. You ask yourself this every column and every time. Vehicles. Did I purchase any vehicles? We go and have a look here. No purchases of vehicles. So we put a dash under additions at cost. Did I sell any vehicles? Yes, I sold a vehicle, carrying value of 60, ACBP of 91. And remember, we already worked out, somewhere here I worked out for you already what the cost of the vehicle was. 91,400 plus 60,000 is going to give us our cost of the vehicle. But when we dispose of a vehicle, it says here we must write in this column disposals at carrying value. So the vehicle, the carrying value of the vehicle we sold was 60,000. So we're going to write that 60,000 in this column. Where did I? Okay, I'm just going to type this amount here for you. 91,400 plus 60,000. 91,400 plus 60. Oh, we did it in the disposals. Okay. The cost of the vehicle was 151,400. Remember, if we go back here in our asset disposal, we can get we've already worked out the cost here, 151,400. So now when it comes to, we must first do the depreciation for vehicles. So vehicles says that we must depreciate according to the diminishing balance method as well. Workings 2, is for vehicles depreciation. So we go down here to workings 2. And we have got our, let's do it this one over here. Here, or, where it says or. 368,000 is the opening carrying value for vehicles, 368,000. And remember, we want the carrying value for depreciation because it's diminishing balance method. But we must subtract from that, on the 1st of July 2021, the carrying value of the asset that we sold, because we can't depreciate it. We didn't own it at all during the year. So 368 minus 60,000. And only the remaining 308,000 will then multiply by 20%, vehicles, 20% on carrying value, and work out that our new current depreciation for the year is 61,600. And we write there in brackets 61,600 on the current depreciation or depreciation for this year line. Okay. And then you can work out your closing balances again. Which one is the cost line? Here we go. Cost is this middle one. We've got opening cost of 560 minus the cost of 1,514 of the vehicle that we sold, which gives us a closing cost of 408,600. And you can use this here at the top here. This is your cost here. So opening cost minus the cost of what we sold will give me my closing cost. Opening ACDEP 192 over here minus the 91,000 ACDEP of the vehicle that I sold, because that's gone. It's not in my books anymore. Plus the new depreciation for the current year on vehicles, which is 61,600, and that then gives me a total closing ACDEP of 162,200. 408,600 minus 162,200 gives me a closing carrying value of 246,400. That's the same procedure for every single column. You will do that. So where some students do get muddled up is, just remember this computer, we didn't own it at the beginning of the year, so it mustn't go here at the top. We only add it in here in movements during the year. The same thing with the vehicle that we sold. On the first minute after midnight, on the 1st of July 2020, we still owned that vehicle, so it goes in here in our opening balances. During the day sometime on the 1st of July, we sold it. So that's why it belongs in movements during the year, and we show it as a disposal here in the body of our note. Okay. Okay, guys, I hope this has really helped you with disposals and with notes to financial statements, because those are two areas that students, especially with the note, that they battle. And you can see if you follow logical steps and you know what your method is, and you know exactly what your format for your note and exactly what your format for your asset disposal account looks like, and you memorize those, you will never ever get them wrong. Okay, I'm going to close off this recording here so that the total recording is not too long, and then I will continue with the rest of the questions for this assignment in another recording.